How to invest in overnight mutual funds. One of the biggest advantages of mutual funds is that they offer the resources for individual investors to attain broad diversification in their investment portfolios. Even though many rich individuals and institutions use mutual funds as at least the center of their portfolios, having significant wealth is not essential to construct a well-diversified portfolio with mutual funds. Certainly, it's feasible to assemble a well-diversified portfolio of mutual funds with as little as $100,000, a moderately well-diversified portfolio with $50,000, and an adequately diversified portfolio of index funds with much less. Carrying a well-diversified portfolio is significant for three reasons. First of all, diversification can best be described as not putting all of your eggs in one basket. Mutual funds are outsized diversified portfolios, therefore you should supply automatic diversification within their respective asset classes. Investing in a number of mutual funds to increase your investable funds across a range of asset classes boosts your level of diversification and lessens your combined exposure to risk. As investment risk is calculated in terms of volatility, decreasing aggregate risk drop-offs the volatility of the value of your portfolio. Secondly, even if the expected return diminishes with related risk, the relationship is uneven and favors return. A well-thought-out diversification plan has the potential to significantly reduce the collective risk of your portfolio at the cost of a comparatively small reduction in your expected return. For that reason, you get a much safer journey for a minimal cost. Third reason is that over the past 3 decades there have been several studies conducted, and they have concluded that asset allocation accounts for between 90%–97% of your success as an investor, where success is referred to as maximizing return at a level of risk that is steady with your level of risk tolerance. Individual security selection describes the rest of investors' long-term success. I just found an ideal startup airline on Google Finance. Yeah. Balsha Airlines Incorporated centers on providing scheduled air transportation from the United States to Russia and former Soviet Union countries. Balsha Airlines filed its application with the DOT to provide service from JFK Airport in New York to St. Petersburg in October 2007. The airline filed its application for FAA Air Carrier certification during 2008. Balsha has registered 2 trademarks, Balsha and Voyager Class, and 5 trademarks are subject to registration. It also aims to provide first business and Voyager Class accommodations. Balsha focuses on providing excellent customer service and reservation centers in New York and in St. Petersburg to list schedules and tariffs in the official airline guide and provide international access to reservations on Balsha's flights through a computer reservations and ticketing system. According to the FAA approval, expect stock price of $0.50 to $1. Upon inaugural flight in November–December 8, expect $2 to $3. The sustained affluence of Southwest Airlines registered sign and the recent success of JetBlue registered sign demonstrate the worthwhile and intensifying market for new U.S. niche carriers such as Balsha Airlines, an ultimate choice for making your investments.